Birchcliff Energy posted low profits but higher revenue for its fourth quarter. The Calgary-based oil and gas company says it is still positioned for growth despite facing fluctuating oil and natural gas prices. So here to tell us more is Chris Carlsen, President and CEO of Birchcliff Energy. It's good to have you join us. Thanks so much.
Hey, thanks for having us, Lindsay.
Are you happy with the fourth quarter results?
Yeah, you betcha. I'd say from Birchcliff's point of view, we had an excellent fourth quarter and actually full year 2025. So if you look at the production on the full year, we averaged over 80,000 barrels a day for the year in 2025, which is a record for Birchcliff. So a milestone there. And then production in the fourth quarter was really strong as well, sitting at 83,000 BOEs a day. So production's really strong, and that's really on the back of efficient execution throughout the year and also driving our costs lower. So our business and our people have been really focused on those two initiatives, looking for efficiencies throughout the business to drive our capital costs down as well as our operating costs. So you saw both fall in the year of 2025. We were able to drop our per well costs by just over 10% year over year, as well as our operating costs are down to a record low $2.88, which is down 10% as well from 2024. So overall, really happy with the performance. In addition to that, I would just add we had really strong cash flow for 2025 and in the fourth quarter, which allowed us to pay down debt. We paid down almost 14% of our debt position from where we were at the end of 2024 versus today. So company's in a really strong position as we move towards 2026.
Yeah, there's some really strong numbers in this latest report, but I did want to ask about the lower profits that were reported too. What happened there? What are you attributing that to?
Yeah, so in the profit line and the net income, it's usually unrealized future gains or losses of a position we have out at NYMEX, sorry. So that can swing from quarter to quarter. It's just a mark to market based on where the forward prices are going. And as you know, that's changing quite volatile. So overall, where we're focused is the adjusted funds flow, which is how much cash flows the business is creating. And we generated about $422 million of cash flow in 2025 against spending of right around $300 million. So we probably had $117 million of free cash flow, which we were able to pay that sustainable dividend of 12 cents annually, $33 million a year, as well as reduce our debt and strengthen that balance sheet. So overall, again, like we talked about, the numbers look really strong from our point of view.
Yeah, and as you mentioned, like the prices for oil and natural gas have been absolutely swinging. Natural gas prices going higher for most of the winter because we've been having such a cold winter. So I wonder how much of what you're seeing in the numbers you can attribute to that, just that we've had such a cold winter and so natural gas prices have been going up.
Yeah, and certainly we've seen some cold weather out east. I know specifically the luxury of Birchcliff, one of the differentiating factors for us, we would have in 2025, we had about 72% of our gas sold outside of local AECO markets here. So we were able to get 40% of our gas that's long-term committed out to Dawn, which is in Southern Ontario, sold in U.S. prices. We also had about 35% of our gas in 25 sold at NYMEX, which was also a strong market. So when you look then into 2026, the cold weather, which really started to amplify here in late January into early February, and I know you guys have seen it specifically in eastern part of the country, it's really cold out there, and we've had the luxury then of having almost 40% of our gas sold out into that market early here in 2026, and that'll continue on for a duration. If you just take a step back and think about the local market at AECO, which has been relatively weak, and our weather out west here has actually been quite unseasonably warm. So, you know, when you think about the local AECO market, which we sell in 2026 about 45% of our gas into this market, that LNG facility on the west coast is just continuing to ramp up over time and finish the commissioning phase. So we'll start to see the benefit of that here into the spring, summer, which will cause, again, more demand pull out west here, specifically at this AECO market. So I think the most important part is you need to be diversified in your gas sales points, and Birchcliff certainly has the luxury of that.
Looking ahead, Birchcliff also, you're aggressively developing a new high-quality land position in the Elmwood area of Alberta. I believe you're aggressively trying to develop that. I'm wondering, like, what specific milestones or conditions would give management the confidence to approve a positive FID there?
Yeah, so our first priority here in 2026 is to fill the existing infrastructure we have, which is in our core Pouce-Coupe-Gordondale area. And so we'll grow the business in 2026 by 5 to 6%. And if you went from Q4 25 to Q4 26, which is when we plan on having that infrastructure full, we'll grow probably almost somewhere around 8 to 10%. So significant growth coming, and I'd say low risk growth and very profitable growth coming by filling our existing infrastructure in that core Pouce-Gordondale area. And then as you mentioned, Lindsay, is that we've got a future development area in Elmworth, and that really is a 2026 end of year, early 2027 decision point on us potentially building a 100 million a day gas plant down there and drilling the associated wells to fill it. But I think our business and our company and our people are really excited about that future development asset in the context of it's a fresh map sheet down there. We've only drilled 3 wells on almost 150 square miles of mineral rights that we control. So the reality there is we can take all the learnings from our Pouce-Coupe-Gordondale asset and all of our strong team members that we have in Calgary and up in the field and really exploit it down there and create value for our shareholders.
Okay, we will leave it there. That's Chris Carlsen, President and CEO of Birchcliff Energy. Appreciate your time today. Thanks for joining us.